Hello YouTube, this is Antonio the 13th Vlogs, starting a small account investment series. I would like to document the growth of this small account on YouTube and how I go about accomplishing that. And how I plan on going about accomplishing this is probably what is considered boring, but I think at this point, given everything else that I've tried, is going to be the most effective method. And that is buying stocks in reputable companies and selling covered calls on those positions and contributing my savings to the account. I have tried, and there are plenty of YouTube videos covering these sort of strategies like credit spreads and options trading and other option strategies that you can use that they say will grow your wealth quickly, which is true. If you get at least okay in it, you will definitely experience wins that will grow your account to like this on the chart here that you can see. You will get this sort of movement. But what I found, at least, and I think based on other traders that I've talked to, who are probably not practicing the position sizing and risk management that they should be, like I wasn't at this time. YouTubers don't really tell you about also the big losses that you're going to experience when you try to pursue gaining that quick wealth. And so I have two options here, as I see it. I can continue the spreads training or the spreads trading, but use more mechanics that are more in line with, say, tasty trade mechanics, where I'm only using 1 to 3% of my account per trade. Or I can dedicate the account to buying positions in stable and reliable companies and then selling covered calls based off that. And also selling cash secured puts to get shares in those companies that I just mentioned. Now, I'm going to do the last option instead of the first because I just don't see how the first at my account size will be worth it. So if I was following tasty trade mechanics in this account, for example, which by the way is kind of large for a small account, there are people, out there trying to grow like $2,000 or $3,000 or $4,000 accounts, and trying to achieve 1 to 3% of your account per trade with spreads is, I'm not sure that it's even possible with an account that small. But in this account size, at least, I could. I could do like a SPY $1 wide spread, put credit or call credit, and use, 1%, 1 to 3% of my account. The problem is, in my opinion, is that you're only getting about $20 to $40 in credit-ish, depending on the delta that you're selecting. And holding something that is as risky as a credit spread is, in my opinion, for only $20 to $40 after, 20 days of holding the position for theta decay to kick in and for you to collect that premium, assuming that you're also using tasty trade mechanics and you're only collecting 50%, you're theoretically maybe getting, $10 to $30 per trade over a month. Now, granted, you have more than one trade on, of course, with that account sizing, but still, that's just a really low amount for the risk, in my opinion. So I would rather personally hold long shares in a reputable company and then sell covered calls, especially at these prices. With the market sell off that we're seeing right now, it's kind of a good opportunity to buy into some of these companies that, for example, Nvidia is one of the positions that you can see here. A few weeks ago it was trading, 130, 140, $150 a share. Now we're down to about 110, which is a pretty good discount on a good company that, yeah, we may see some more downside with all the tariff talk and who knows what else may come up. But in the long term, I'm sure that Nvidia is going to recover its price, and I can just sell covered calls along the way to lower my cost basis and make myself profitable once it is, um, once the share price has recovered. So that's the way that I'd rather grow this small account and with my savings. I think that's also another thing that many YouTubers don't like to talk about because it's not exciting and yeah, it's not 100% gains or things like that. But at a small account size, um, your savings are probably the most effective way for you to grow your account. It's like there is no bet. There is no way for you to lose that until you put it into the market, of course. So it's a surefire way for you to grow your account, your small account, which you should be focused on doing. So why not take advantage of your savings if you have the money to do that, of course. So that is what I'm going to focus on here. I'm going to focus on showcasing my growth journey here from a small account to a large one, utilizing what I talked about, long positions and options based off of those long positions. Now, I may throw in some spreads or some other options trades occasionally, but those will be smaller portions of the account and things that they will basically be trades that I'm using to try and improve myself as a trader and not necessarily as a growth mechanism in this account. So yeah, that's what I'm going to be doing here. So if you wonder, in my account history, what this is, the big spike and then the big dip, that's what that was. Credit spreads. And then along here, I was also doing credit spreads and I was using smaller sizing though. So as you can see, I was, growing the account slowly and steadily. And then here at the end, you can see that I got impatient, got into a bigger sizing, and then, screwed myself. So, yeah. So that's what the account has been up until this point. And so what my positions are now and what I'll be updating on going forward is, so let's, excuse me, let's cover the biggest position first, which is Nvidia. So I bought 100 shares of Nvidia because A, it's on sale with this, market sell-off that we're seeing. I viewed it as a good opportunity for me to get 100 shares in a company that is well established, well known all across the globe, and isn't probably going to go bankrupt overnight. And more importantly, it's something that I'm comfortable holding into this market where things just are continuing to go down right now. So I am comfortable holding NVIDIA at this 109.69 average here. Even if it continues to go down, even if it goes down below 100, I will continue selling covered calls on this to continue lowering my cost basis. There are YouTubers and other people out there who say don't sell covered calls below your cost basis. I think that as long as you are watching your position carefully and your covered calls, that is, and rolling them when they get to be in the money, I don't think, I think this is something that can be managed without getting, unless you just get some, unless you're selling your call to some rando who just for some reason really wants to execute his share or execute his contract early for some reason, then odds are you're probably going to be able to continue to hold on to that and then roll it if necessary and avoid unwanted assignment. I've been trading spreads and options generally, probably about a little under a year, and I have yet to be early assigned on anything. And I've done plenty of trades. Like, I understand the risk, I know that it can happen, but I'm willing to take that risk, that very low risk, in order to continue bringing down my cost basis as NVIDIA and the market generally continue to go down, if they continue to do so. So that's why I bought NVIDIA. I'm going to be holding it for the long term and use the 100 shares to sell covered calls and bring in that passive income, lower my cost basis, and invest that money into other things. So that's my biggest position. And I've already got a covered call on that, which I sold on Friday at the 115 strike. If we get a bounce, which we're coming close to some support on the S&P 500, we still got a little further to go downward potentially, but we're getting close to a support. So there's a good chance that this bounces and my 115 call will be potentially in the money. And if that happens, then I will just roll it out to the next week to a strike that's higher. And yeah, continue rolling as necessary, bringing in that premium income. And I mean, if I do get assigned at 115, it's not the end of the world. It's going to be a profit on my shares. So, but I do intend to roll that out if this does get to be in the money. So that's my NVIDIA position. My second largest position is Under Armour here. Now, earlier in the year, when my account was closer towards 3 or 4 or 5 grand, most of this has been built up with savings and savings. And so when my account was smaller, I wanted to find a company that fit that same criteria that I talked about, right? Reputable, well-known, and probably not going to go bankrupt overnight, but something that's a smaller share price, because I had a smaller account. Obviously, that means I don't have, or I didn't have a ton of money to just throw down on NVIDIA. And so on this. So I found Under Armour here, and this was the stock that I chose for a couple different reasons. One, because it fit the criteria that I mentioned earlier, well-known company and all that. And two, at the time when I started accumulating it, it was around $7.50. I've brought my average down to $7.07 now. But another reason why I chose Under Armour, and I'll just go to a technical chart here, is that there is a fairly strong support here at the 619 level here. We've tested this level multiple times throughout the past year or two. So for example, right now we're testing it. Let me scroll back here to 2024. In August, we hit this level and then bounced back up. And August of 2024, excuse me. And then May in 2024, we also hit this level and bounced back up. And even earlier than that, September 2023 here, we almost touched this level. So this, again, this is just kind of an area where Under Armour has found support before. And so it was a risk that I was, in my opinion, it was the most advantageous risk-reward ratio, or risk reward setup for a stock that was under $10 at the time that I started accumulating this. So that's what I'm currently playing for now. I'm hoping that we will bounce off this 619 support here as we have in the past, and we may retest it, another time, and then before we get like a really big bounce up. But I expect in the long term, which is what I'm focused on, that this is a good area to buy Under Armour in, and that it should bounce from these levels if history is any indicator. So, but there is a risk, right? I mean, with the way the market is being, it can't be denied that we can break below this 619 level and continue going downward. Even if that does happen, I am okay with Under Armour enough to be okay and continuing to take that loss, or that unrealized loss, in hopes for a better future. Now, the one thing that kind of sucks on this Under Armour position, when I first got into it, there were weekly options, and you couldn't sell covered calls really out of the money and get any premium, but there were some out of the money call options that you could sell if you wanted just a little bit of premium. However, one of the developments that has happened while I've held this stock, unfortunately, is that Under Armour they've gotten rid of the weekly options. So now there's just these monthly options, as you can see here. So that's kind of a bummer. And also, if you want to sell covered calls, there's really, as you can see here, you're not getting anything that's out of the money. So I can't even sell covered calls on this position right now to be bringing in passive income, which kind of sucks, but it's not like, I don't think it's worth selling this position over and realizing the unrealized loss here. I think if I'm patient, this is going to come back up to $7, around $7.50, and I will be able to sell covered calls once again if I just remain patient. And with earnings coming up on I think it's May 15th, the day before this expiration here, I could sell these $7 at the $7 strike here. I could sell some covered calls, and with the premium here, if I were to be assigned, they would I would have a little profit, but not worth it in my opinion. I think if I just remain patient and wait for this to get closer to $7, closer to the earnings, then these strikes, along with the rise in implied volatility, these premiums should be a little better once we get closer to May, but we'll see. Theta decay is also working on these right now, of course, which is also a negative factor on those premiums. So we'll see. I will obviously update you on what I choose to do once that time comes. And by the way, something I forgot to disclose here, in order to get the 10 or 100 NVIDIA shares, I ended up actually having to use a little bit of margin. So I've got about 1,700 used in margin right now. So that's kind of like my first small goal of this account, is to eliminate this margin, right, from the covered call income that I'm getting off of NVIDIA. So yeah. And then I have a couple other smaller positions. As you can see, I've got some crypto that I got from Robinhood on various giveaways. And I've got one share of SPY here that I plan to continue building out this SPY position in the long run. One of my long-term goals in this account is to get to 100 shares of SPY so that I can begin selling daily or every other day covered calls on this position. So yeah, that's basically my account as it stands right now. Since I've really got only one position that I'm doing weekly covered calls on at the moment, I'm probably going to do my updates probably once a month for now. Once the account gets bigger, then I'll probably start putting out weekly videos since there will be more to cover. So I hope to see you in the next video. Thank you for watching to this point, and good luck in your own trading.